Good morning. Welcome to Bazaar Morning Call. I'm Sonia Shanoy and with me is Lata Venkatesh and Nigel D'Souza. And from the entire team at CNBC-TV18, once again, here's wishing all our viewers Happy Diwali. Samvat 2079 has begun with a bang. We had a fabulous Muhurat session yesterday. And now the market is just about less than 5% away from that 52-week high. So it's all guns blazing. There was a sharp rally on Wall Street overnight as well. In fact, 2 days running now, we've seen good cues from the global markets. The Dow is up over 400 points. And there are a lot of earnings coming through from the technology space in the US market. So all eyes will be on that. Alphabet, Microsoft, Meta, Amazon through the course of the week. We'll keep tracking that very closely for you. But from our own markets, blockbuster numbers from ICICI Bank and Kotak Mahindra Bank will keep sentiment quite high. And that's what happened yesterday as well. You had strong performance from the likes of SBI Life as well. So we'll keep tracking all of these stocks. Reliance was just a bit of a drag because of the oil to chemicals business and the pressure over there. But otherwise, most of the cues that are stacked up are well in favor of the bulls. And we saw that progress yesterday. The SGX Nifty this morning, though, is indicating a slightly muted start. But yesterday, Lata and Nigel, was a really good session, befitting for the day.
Oh, absolutely. I think the global geography has changed a bit. I would think that now the markets are reassured that a Fed put or a central bank put is available. Until now, the fear was that the Fed could be aggressive, or in fact, all central banks could be extremely aggressive in its rate hike. Now, what's changed in the global market and which will benefit Nifty bulls as well is this this WSJ article by Nick Timiros. He's usually seen as the guy who's very close to the Fed and therefore knows their mind. When he's saying something, the Fed is actually indicating that to the market. That's that's the importance of his report. And he has reported that several Fed members are now beginning to worry about too quick an increase in interest rates. This is following, the market had already penciled in the 75 basis in November, but they were beginning to pencil a 75 in December. Now, from what Nick says, it looks like it's going to be 50 in December. So that's one big point. And even before that, the way in which the taxes were rolled back in the UK, a government fell, and the BOE changed its entire philosophy and pushed in liquidity rather than withdraw liquidity because of financial instability was again an indication that the central bankers will not let down the market if it is a question of instability. Then inflation goes out as the goal and stability comes in as the goal. So that central bank put, BOJ has also intervened. This is definitely putting a bottom for the market. So my sense is that 3,400 or thereabouts, which was the S&P low on the day of the UK pension funds problem, I think that is going to be a near-term bottom. And to add to all this, perhaps a positive for India is also that the Chinese political turn with Xi Jinping being seen as packing the Politburo with his men, his zero COVID policy, the way he has gone after the tech companies. All this, again, would look like positive India because China becomes too dangerous to be touched at this point in time. The only point I would make is, of course, and as you pointed out, Indian bank earnings is, again, a big tailwind. The only point that I would want to put by way of caution is that, if it is a central bank put, it is going to be more pro-DMs. And we would be, we would still do well, but we could underperform DMs in the very near term, if that is the big tailwind. But for the near term, what's the logic looking like?
Well, Lata, Sonia, a couple of points. First, the global markets, they've seen a bit of a rally because there's the hope that maybe we're nearing the end of that rate hike cycle. That's at least as of now, going by what the San Francisco, speaker did have to say, and also going by the Wall Street Journal report. So that's point number one in terms of global cues. India, well, with regard to the Hang Seng or the Shanghai market, on the Muhurat session, we showed who's the boss, and it set a bit of a trend because yesterday the Shanghai market was down 2%. The Hang Seng was down close to around 5.5 to around 6% odd, and we were up 1%. So we outperformed by close to around, 4 to around 7%. Institutional flows, that's been encouraging. I look at the FI and the DI number together, and the Nifty has been on the winning streak. And that coincides with what's happened with regard to the institutional flows. While the dollar index is well at around 112 odd, that's well behaved, and that's pretty good news from an emerging market point of view. The Nifty Bank is all set to go ahead and, hit a fresh all-time higher. So let's take a couple of those points. The institutional flow number first up from October 14th onwards. I'm not taking yesterday's session because volumes are relatively low. But otherwise, in 6 sessions, they bought at an average closure of 900 crores. I like that. The FI short covering continues. Remember, they were aggressively net short on the index, and they've gradually been covering out. Even yesterday, 13,000 short contracts were covered out. And in October 11th, the short positioning was 85%. Currently, the short position has come down to around 66%. So from being net short of 1.2 lakh contracts, we're down to 60,000 short contracts. Net, that is. FI short minus the long positioning out there. In yesterday's session, we had 2 strikes that were active, 17,700 put as well as the 17,800 put. So it gives us a bit of a range, for today's session itself. The range is 17,600 to around 17,850 odd, and the long bias will continue till the 50 DMA holds out, which is at around the 17,500 odd mark. The SGX Nifty, you need to compare what the SGX Nifty is doing with what the Nifty futures ended yesterday. And it seems yesterday we didn't do as much as the SGX Nifty anticipated. So that's why though the SGX Nifty in an absolute terms is showing a downtick, if you compare it, actually we'll be opening up with a gain of around 40 to 50 points. That's the SGX Nifty's indication. But the Nifty Bank, that's going to be the driver if we need to get to that 18,000 odd mark. Only 500 points away from those fresh all-time highs. And my guess is in the next couple of days, we could be there. Dare I say that we go there today itself. Expiry as well, so some bit of volatility will pick up because tomorrow we have a holiday.
Absolutely. It's one of those weeks, right, where there was a holiday yesterday, there's a holiday tomorrow, and by the time you come back, it's already the end, almost the end of the week. So it's kind of like a festive week, a little bit of a sleepy week, and I'm sure volumes could be also on the lower side because a lot of people are traveling as well.
Festive, I agree, but not sleepy. The bulls are up and awake.
Oh, the animal spirits are back, definitely. I mean, we're what, 4-5% away from all-time highs, and we have a new Asian origin Prime Minister in Britain as well. So that was a big headline overnight.
Oh, absolutely. The third Asian origin PM. Portugal has an Indian origin PM. So that's another cause of celebration, perhaps. But it's time we got you the equity call of the morning.
Yes, we have a call coming in from Gautam Dugar of Motilal Oswal first up. He expects the Indian equity markets to remain range-bound in a 200-point range dictated by global cues. He says that banks and tech results have been strong and banking stocks should continue to display good strength. Their top picks include ICICI Bank, SBI, Titan and large-cap tech stocks.
Okay, and some money market views for you. Bhaskar Panda of HDFC Bank says the US market remained choppy, yields remained elevated, but both manufacturing and services PMI readings were softer. He adds Japanese central bank intervened again in the currency markets. In India, the USD INR would depend on the 2-day supplies in the market, but direction is still towards mild depreciation of the rupee. Consequently, says the dollar-rupee pair could trade in a range between 82.70 and 82.90 for the day.
And on the bonds, Bhaskar Panda says the US yields are up, but oil prices have stabilized. He says Indian bond yields could remain range-bound, especially the 10-year benchmark yield, which is expected to trade in an intraday range between 7.47 to 7.52% for the day.
Well, we have a lot of stock-specific action as well to track for you, but we'll get to that in just a bit. In our special Top 10 segment, we're looking at ICICI Bank, Kotak Mahindra Bank, SBI Life, DLF and United Spirits. They are stocks on the back of positive news flow. On the flip side, you have Reliance, HUL, JSW Steel, Torrent Pharma as well as IGL. They are stocks that could react to a bit of negative news flow that's come in the last couple of days.
Okay, thanks for that, Nigel. And now let's invite our first guest of the morning. Joining us now is Richard Harris, Chief Executive at Port Shelter Investment Management. Good morning, Richard. Thank you very much indeed for joining us. Well, we were discussing whether a kind of a central bank put is emerging, with some Fed members saying that we shouldn't hike too quickly, and BOE, putting in liquidity, turning taxes getting overturned. Do you think now a central bank put is emerging?
Well, first of all, happy Diwali.
Thank you.
I don't think the Fed actually is going to be quite as happy. I've seen the story coming out about the Fed maybe starting to ease, starting to soften. I find it very difficult to believe. We still have sustainable inflation in many areas. There's been no real evidence that that's going to slow down. We know it's going to ease, and we know prices have been coming down, but there's still a lot of expensive inventory in the system, and that's going to prevent prices coming down. So I think this so-called Fed put is not really there at the moment. And the key evidence really is if you look at the US long bond, it's 4.2, something like that. The last print of US inflation was pretty well near double digits. So you have to come down a long way in inflation, even to be anywhere near that 4.2. So I can't see any way that the Fed is going to be able to keep inflation in check if they start to soften now.
Okay, Richard, good morning and happy Diwali to you as well. Thank you for your wishes. This is an auspicious time of the year here in India where people take a lot of token trades and sort of set their targets for the year. How do you think one should approach the Indian markets now? There's been a stark outperformance through the course of the year. What next, and which are the big themes that you like here in India?
Well, I think what we've seen is that India has been quite resistant compared to many other markets, especially emerging markets. If you look at how difficult China has been, there's a theme going through, though, that we've seen that where, if you like, policymakers have tried to buck the market, they've been punished. It's happened in Japan, where policymakers have not wanted to increase interest rates, so the yen has collapsed. It's happened in the UK, where Liz Truss tried to really buck the markets. And one has to wonder whether it's not happening in China too, where the authorities are tending to focus very much on political policy moves rather than economic policy moves. I think the one advantage is that India is still really looking much more towards market issues. The government isn't looking to intervene too much into the markets. And I think that's a positive at the moment because there are some signs of positivity, even though the overall global picture is negative. I think some of those signs of positivity may be relatively temporary, looking maybe perhaps through to the end of the year. But certainly that is enough to hold some markets, and I think India is one of those, give some support under the market at the moment.
All right. Hi, Richard. Morning. Nigel on this side. Well, I want to ask you about a couple of factors. You're not in the camp that believes that, the Fed put is existent in the first place. So my question to you is, how many more rate hikes do you believe the Fed has in its kitty? That's point number one. And the second factor is, we are bracing for a recession, a slowdown globally as well. Europe is in a bit of a mess. Do you believe that for global equities, the lows that we saw in June 2022, that will hold out?
Well, I think the first one, how much is the Fed going to tighten? It's really a question of how much would they like to tighten and how much do they dare tighten? Because obviously interest rates have been so low for so long. There are all sorts of zombie companies, zombie organizations, zombie employees in the markets that have really been held in place by low interest rates. Now, if interest rates go up too much, we are going to see the economy precipitated into a recession. So I think the Fed probably have to play a very delicate balance between putting rates up and trying to control inflation. I don't think they're going to succeed in controlling inflation unless they put rates up. So they're going to have to make that decision. In Europe, I think it's the same kind of thing, but perhaps I think Europeans are maybe more used to higher interest rates going up. So there's more leeway there, but perhaps there's less conviction among the central bank there to do it than there might be in the US. So I think that decision is really going to be tempered very much on what the central banks think they can get away with at any particular moment in time. But whatever happens, I think they're going to have to stay on a tightening basis in order to keep inflation in check.
I take your point that inflation is not looking like it's going to be, controllable anytime soon. My only point is whether a bottom has been put going by the overactive central banking action we saw. But be that as it may, with China now, in a kind of an untouchable spot because of the political developments, would you expect more money into India? And secondly, where? Which stocks in India?
Well, I think that, yes, there's always a chance that investors are going to move. However, I think global investors will tend to retreat back home first and then maybe look at other markets to move in terms of allocations. People are, I think, generally on the more conservative tack. And when they do that, they tend to return home rather than reallocate to other emerging markets. But there clearly will be some sort of spillover. I think the issue with China is that at the moment, it's truly uncertain. And by that, I mean, investors like to have some sort of probabilities. Is the market going to go up? What's the probability? Is the market going to go down? What's the probability? In China at the moment, it's uncertain. We have no probabilities. We just don't know. And in that sort of situation, investors are going to retreat. In terms of India, it's always difficult for somebody outside to really look at key areas of the market. But just in general terms, as a multi-asset investor, I tend to sort of look at a market and say, what is the economy good at? You know, India is very good, for instance, at generic drugs. It's very good at certain elements of the economy, certain industries. And as a multi-market, a global investor, you tend to want to focus on where the country is good at. France is good at luxury goods. China actually is quite good at electric vehicles. So I wouldn't be totally out of China whatsoever. But I think what investors need to do in India, if you're looking at the foreigners, is to say, where is India special? Where's the economy special? And really focus on those sectors.
All right, we will leave it at that. Thanks a lot, Richard, for joining in, and have the best week. And thanks for your Diwali wishes once again. Well, that's the word coming in from Port Shelter Investment. They still are worried a little bit about inflation sustaining, but India is a market that has been very resilient, so they're not too worried about that. Let's do one thing. Let's take a quick commercial break. Lots more coming up on the other side. Our entire team will be with us to help us prep for the day.
Well, we analyzed the macro backdrop and now we get micro. We had a bunch of numbers which we couldn't analyze on Diwali Mahura trading day. So our research team is standing by with the key earnings of the last 3 days, which are going to have an impact on markets today. We start with the big fellow Reliance. Numbers, mixed bag?
It was a mixed bag this time. You know, the consumer-facing businesses have done very well. No two ways about that. It was record quarterly numbers both for Jio as well as for retail. And now the consumer-facing businesses together contribute 50% to the overall EBITDA. So the growth over there is something that the street is looking at very positively. It's the weakness in the oil-to-chemical business that is a bit of a concern over there. However, other important developments are they've announced the restructuring of the EPC business and a demerger, and the listing of the financial services business. Although the financial services business has a negligible contribution to the EBITDA, it's just 6% of the total assets, but they're looking to demerge it, list it, and create an entity over there. Brokerages, some of them have actually cut their target prices. The debt of the company has also risen. On a quarter-on-quarter basis, it's a big rise in debt for Reliance Industries, $11.7 billion now versus $7.7 billion last quarter. The rise in the debt is not just because of higher working capital, but they had that 5G spectrum payment as well and currency translation losses that they had to bear this time around. Now, here's what brokerages have made of the numbers, and on the stock, JP Morgan continues to have an overweight. They have a target price of 3,065. HSBC has cut their target price and they have a hold. They've cut it to 2,500, while Jefferies retains a buy with a target price of 3,090. Of course, standard disclaimer on Reliance Industries. It is the owner of the channel that you're watching right now.
Okay, all right. Sonia, thanks a lot for that. Well, let's hop across to Ekta. She's jumping in to tell us about ICICI Bank. The stock reacted yesterday positively. Ekta, the numbers were pretty good.
Well, yes, and I think Lata will stand testament to it as well. It's a record-breaking quarter for ICICI Bank. NII up 26.5%, profit up 37%, global net interest margins at all-time highs at 4.31%, gross NPA and net NPA, which are the lowest in 31 quarters, so gross NPA at 3.19%, net NPA at 0.61%. Slippages came in at 4,366 crores versus 5,825 crores. Loan growth at a 27-quarter high, so up 22.7% for advances. So an all-round beat for ICICI Bank. It was the top gainer yesterday. You could probably expect that momentum to continue today.
Right. I take your point, Ekta. This was mind-blowing numbers, and it's much more the consistency. Yeah. You know, for 5-6 quarters, Sandeep Bakshi and team have delivered So this 4.3 margin, I think it's the highest I remember in terms of ICICI margins. Maybe they've done better during the rah-rah days of 2004 to 2008, but extraordinary margins. It doesn't look like a flyby, you know, like a flash in the pan. It's a solid, consistent performance. Mangalam, and the other big boy, HUL, you said disappointed in a couple of quarters, right? A couple of parameters, right?
It was disappointing on a couple of parameters, and we saw the reaction in yesterday's trading session as well, albeit on low volume. So I expect that weakness to continue today as well. The FMCG index has been the best performing index this summer, but some of the results have not been the best, to be very honest, because HUL revenues largely in line, 50 crores below estimates, volumes at around 4%. But it's the EBITDA where the problem is, because the EBITDA came in at around 3377 crores. The street was working with a number above 3400 crores. The margins are lower. The net profit appears that it's a beat as against street expectations, but that's primarily because, you know, effective tax rate was just around 18% versus 26% the same time last quarter. Ad spends as a percentage of sales have been 7.1%, which is at a multi-quarter low. So despite that, the EBITDA has been a miss. Why is that? Well, because the gross margins are at the lowest that we've seen in the last at least 15 to 20 odd quarters, 45.8%. And what's not, you know, allaying fears is the management commentary, because they are optimistic, but they're cautiously optimistic, and they believe that going forward they will up the ad spend. So will that upping of ad spends come at the cost of margins or not is something that we'll have to monitor. For now, expect some red on the stock.
Okay, and we've seen that taken place in the Muhurat session yesterday. It was the only Nifty stock that had a big fall. It was down about 3% odd. But Kotak Mahindra Bank, a lot of brokerages have raised their target prices after a very good set of numbers that came through. Ekta has the fine print for us. Ekta, over to you.
Well, good quarter which came in for Kotak as well. So NII was up 26.8%, net profit was up around 27%, net interest margins recovered back to those levels of above 5%, so 5.17%, loan growth of 25% year on year, and slippages below 1,000 odd crores. What could weigh against the stock is the valuations, considering that it's trading at around over 4 times price to book value on an FY24 basis, and the street is a little concerned that this margin elevation that we've seen for Kotak might not continue going forward. So maybe that could be a little bit of a dampener on the stock today.
No, you absolutely. That was the point I was going to add. Deposit growth has not been as strong as advances growth, so now they just have to raise deposit rates. So this NIM may be a little tough to sustain. Nigel, what about JSW? The numbers looked a bit shocking.
Well, yeah, the JSW numbers were disappointing. To, just give you one line on it, the benefit of lower costs didn't flow through, and the hit in terms of lower steel prices did knock them back. And that is likely to reverse from now on. But let's run you through the numbers. The consolidated EBITDA number, big miss out there. On the margin performance as well, a big miss. Remember, for JSW Steel, we look at the standalone EBITDA per ton. That's the India business EBITDA per ton. And that came in much lower than what we were working with. Came in only around 3,500 rupees on a per ton basis. That was further, the consolidated number further got hit because of subsidiaries, whether it is their coated division, whether it's the Ohio operations as the US operations, or even if you're looking at Bhushan Power and Steel, all of them reported EBITDA losses. But the management has said that all of that will turn around from the coming quarter itself. And the overseas operations, you're talking about the European business, that's the Italian business, as well as the US business. Put it together, they delivered an EBITDA loss of around 100 crores. In the previous 3 quarters, it was around 275 to around 300 crores odd. So a miss on the numbers, but I think the street has digested most of that. It could open up mildly in the red, and then in fact we take it from there.
Okay, thanks for that. So that's on JSW Steel, but good set of numbers coming in from SBI Life. Surbi has more on that. Surbi, over to you.
SBI Life reported a strong performance. Their APE saw a decline of just 1% on a year-on-year basis, but their value of new business that grew by 24% on a year-on-year basis, and the VNB margin that expanded by nearly 640 basis points to 32%. The expansion was largely led by the higher share of non-par products. In their con call, the management said that they are confident that the premiums will grow by 20 to 25% this year. Their focus currently is to grow premiums, and the VNB margin is just going to be an outcome of their change in the product mix. They are confident that the second half of this fiscal is going to be much better than the first half. We'll go with a green on this one.
Thanks a lot for that, Surabhi. Torrent Pharma numbers, Ekta?
Well, Well, largely in line, Lata. So no real big miss or beat, which is coming for Torrent. Revenue was up 7%. Street was anticipating a 10% growth. Domestic growth, which is basically the bulk of their business, was up 12.5%. US was down 5.1% on a Q-on-Q basis. That is because of double-digit price erosion as well as lack of new launches. And margins came in just about at 29-30%, so no surprise there. Profit down around 9%. The profit miss was because of the Curatio acquisition, so that's the reason why the profit missed estimates. The company is confident of outpacing the industry growth led by India and Brazil. US is expected to remain subdued, but the street is probably going to look at India more than the US in the near term when it comes to Torrent.
Okay, thanks Ekta for that. Well, let's find out what's the latest on DLF this morning. Sonal's tracking that one for us. Sonal, good morning.
Good morning, Sonia. Well, for DLF, the numbers were decent, largely in line with what the street was working with. Bookings, they were flat on a quarter-on-quarter basis, but they were up 36% on a YOY basis to come in at 2,052 crore rupees. The bar chart will come up for you. It has fallen from levels of Q4, but still is seeing some increase on a YOY basis. Lease income for the company in the DCCDL business was up 6% sequentially, 20% on a YOY basis, and the company says that the housing demand is quite strong, and especially in the festive season as well. Luxury segment continued to witness sustained demand. They've been able to reduce their debt on a quarter-on-quarter basis, which now stands at 2,142 crore rupees. They had a surplus cash flow of 410 crore rupees, out of which they paid dividend close to 292 crore rupees. On the back of this decent residential bookings that the company reported, Jefferies has raised their FY23-24 pre-sales estimates by 10 and 7%, and they expect the company to continue to do well in both the segments.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Surbhi. She's here to tell us about United Spirits. Surbhi?
United Spirits reported better than expected results. Their revenue was up 18% on a year-on-year basis. EBITDA margins came in at 16% versus our poll of just 14%. Gross margins did see some contraction, but that was expected because of the inflationary pressure. The net profit included a one-time profit from a sale of business. If you exclude that, the net profit was down 30% on a year-on-year basis. They did report strong volume growth as well. Their overall volume growth was up 9% on a year-on-year basis. And this was largely led by the prestige and above segment, which is their premium segment, where the volume growth was 14%. The realizations for this premium segment was also up 8% on a year-on-year basis. In the short term, the management does expect the inflation challenges to continue, but they're confident about their revenue growth in this for FY23. We can expect the stock to be in green today.
Okay, well, after such a hectic Diwali weekend, for sure the stock will be in the green this morning. Thanks a lot for that. But let's go back to Sonal. She's tracking IGL this morning. Sonal, why is that?
Well, I can't say the same about IGL, what we said about USL. It's expected to be in the red today because weak set of earnings, especially on the margin front. Higher gas costs are for sure impacting companies' performance this time around. Revenue growth of 11%, but margins, they were down 15%. That is the EBITDA, and lower than estimates. Margins came in at 14.8%, which is lower than the estimates of 17.7% as well, leading to a profit decline of 1%. If we look at the EBITDA per unit, it came in at 7.1 rupees versus a poll of 8.8 rupees per unit. Volumes were lower as well at 8.1 MMSCMD versus 8.7 MMSCMD. Jefferies, on the back of this, has seen a marginal decline in their FY23 EBITDA at 7 rupees versus 7.1 rupees, which is not much, but considering that the margins have fallen sharply this time around, expect the stock to be in the red today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's do a quick recap then of all the top stocks we just covered. Stocks with positive news flow include ICICI Bank, Kotak Mahindra Bank, SBI Life, DLF, and United Spirits. While stocks with negative news flow include Reliance, HUL, JSW Steel, Torrent Pharma, as well as IGL.
Okay, let's do one thing. Let's take a short commercial break. But on the other side, we'll have Prakash Diwan joining in to analyze all of these numbers for us. We'll also connect with Jal Irani of the Nuvama Group and Balaji Subramaniam of IIFL Securities to discuss Reliance Industries Q2 earnings as well as lots of important developments on Reliance. More on that coming up. Let's let's discuss all the big numbers, right, that came through over the last many days. In case you missed out on them because of the festivities, we'll get you up to speed. Reliance Industries reported a mixed second quarter number. The consumer-facing businesses have put up a very strong showing, but the oil-to-chemical business continues to remain weak. We have a whole host of experts joining in. Prakash Diwan, Jal Irani, who's the Senior Vice President, Institutional Equity Research at Nuvama Group, and Balaji Subramaniam, the Vice President at IIFL Securities, joins in. All three of them have tracked Reliance for years. Prakash, let me start with you. There was also the listing of the financial services business, which is, I think, a small part of the entire puzzle. But how do you think Reliance will react to all of this over the next few days? Weakness in oil to chemicals, but on the flip side, consumer-facing businesses have done really well.
Good morning, Sonia. So, I think there was no surprise in the O2C weakness that we saw. The windfall gains tax has, of course, impacted numbers in a significant way. And as long as it remains there, it's likely to kind of keep that lid on whatever the O2C can contribute. But what's heartening from these earnings is retail has come up with record metrics. After so many years of investing into the business, it's kind of finally coming of age. What happened to telecom, let's say about early last year, is happening to retail now, which means that the consumer-facing businesses not only combined contribute almost 50% of revenue, but could start leading to a lot of profitability increases as well. So the depth out there is there to see, and then we can see how that's kind of coming up. So for the stock, what happens is that you no more start evaluating it on what the O2C business gives, or just a sum of parts which has a significant weightage from O2C. But these businesses also will start getting some premium accorded to the overall calculations. My expectation is the stock usually gives in post numbers. It's historically seen that we've seen a bit of weakness after the numbers are out, but then it kind of recovers. But there is a lot of new strength that's coming up, and you'll probably see some upgrades closer to 3,200, 3,300 price objectives, which probably should be out. And that's what will probably keep the stock buoyant as FI flows start coming back.
Okay. Thanks for that, Prakash. Jal, what would be your view? First of all, good morning. Thank you for joining us. Would you agree that this O2C weakness is probably, a bunch of taxes that came in, export taxes, and therefore we could see an improvement? But more importantly, the financial unit going for an IPO, is this to be regarded as first of more such, IPOs that may be brought by the company? Is that therefore something that will go into your price target for the company?
So firstly, the O2C business and gas included is always the elephant in the room, because 63% of consolidated net profit, even in this quarter, came from these businesses. So that will remain actually a very large driver. And needless to say, the $4 windfall tax did impact things. In fact, if you add back the $4 windfall tax, they did actually have a O2C had a increase in EBITDA of about 26% year on year. So it was essentially the windfall tax which did impact, and of course windfall tax to a similar extent of about $4 continues into this quarter. So that is needless to say going to be a dampener in the near term. On your second question of should we see further demergers? Needless to say, I think the intent over a period of time is to actually list the businesses separately. Now, the time frame, of course, is very open-ended, and one cannot say if it will happen in the near term or on the longer term. The market, you may recall, actually there were rumors that it could happen with this result. So in fact, just the financial services spin-off businesses, in fact, maybe a bit of a dampener to the extent because the market was expecting much larger businesses to be spun off. So yes, you could expect further spin-offs. The timeline is clearly one which remains an imponderable.
All right, Jal, got that. Balaji, morning. Thanks so much for joining, and let's get you into this conversation as well. How would you view the numbers? Point number one. Point number two is, they're talking about demerging this financial services business. Is there any value that you're currently attributing to it? If yes, could you give us a number?
Good morning. Thanks for having me on the show. So I will keep my discussion to Geo since I am primarily a telecom analyst. So as far as Geo was concerned, this quarter was fairly stable, I would say. ARPU marginally went up on a sequential basis, and considering the fact that this quarter had an extra day, and the fact that the FTTH business, which also is included in the overall results, has been growing at a pretty rapid clip. I would say that on the mobile business front, this quarter was fairly stable. And as Reliance had already announced, they are planning to invest about rupees 2 lakh crores in the next few years on 5G, of which they have spent close to 89,000, 90,000 crores on spectrum. And as a result, one would expect the rollout to happen fast. They themselves have given a timeline that they would like to target pan-India coverage by the end of calendar year 2023. I would think that the case for a tariff hike, probably rises post these results, where we are seeing that in the absence of tariff hikes, the revenue has been quite stable. And considering the fact that investments are going to be stepped up from here on. So as far as the Geo Financial Services is concerned, frankly, as of now, we don't assign any separate value for that business.
Okay, you said the case for a tariff hike rises now. Do you think that these 50% margins that Jio has posted for the third straight quarter, right? Is it something that can sustain through the course of the year? And would you raise your earnings estimates for Jio now, Balaji?
See, one thing, actually there are two factors which are at play. One is the fact that telecom is a high fixed cost business. So as your revenue goes up, some degree of operating leverage kicks in, and as a result, the margin rises. The second thing is the fact that the government has cut spectrum usage charge on freshly acquired spectrum. And we saw some benefit from that flowing through this quarter. But that was only for part of the quarter, because the spectrum auction happened during the quarter and the spectrum award happened sometime in the middle or late August. 3Q will be the first full quarter when we see the benefits from the SUC flowing in. So to that extent, there is further room for margin improvement from here on. But I think, all these things were already known to the street. And as a result, at least, my earnings estimate for Jio doesn't substantially go up post these results.
Yeah, all right, got that, Balaji. Jal, coming across to you, I wanted to ask you about the financial services business. Have you incorporated any number in terms of a valuation out there?
Yes, absolutely. See, the financial services business doesn't change the valuation for Reliance Industries at all. Firstly, so we've assigned a value of 106 rupees a share of Reliance Industries shares. Now, why doesn't it change the value? Because really, Reliance Industries holds 6.1% of its own shares as treasury shares, which has been transferred to this company. So that those treasury shares we already value into Reliance's SOTP already, and it just moves from one bucket to the other. And therefore, as a consolidated entity, the valuation does not change materially. I mean, the market may attach some premium or discount separately, but on 106 rupees, the premium or discount is not going to be very material, and therefore the change in value is not going to be dramatic.
Okay.
See, to understand what is this business to start with, I mean, firstly, Reliance is, basically they are looking to get into the various aspects of financial services, mainly on a digital platform in a very significant way, right? So whether it is, wealth management, asset management, digital lending to that extent, and therefore they need a balance sheet for that. And what they have effectively done is about 1 lakh crore of Reliance treasury shares they've transferred to that company. The turnover of that company at the moment is insignificant. And based on that balance sheet, then they will leverage to really launch the other businesses. The advantage Reliance has here is that it has a fair bit of customer knowledge. The digital lending at the end of the day has got a fairly high lending rate because the risk tends to be fairly high. And given that they have built a database of a fair bit of customers, they could potentially leverage that. So this is something that we feel that they have got some degree of advantage where they understand the customers better than potentially some of the others.
Point taken, Jal. Actually, much more thorough analysis of Reliance is needed, but there was such a bunch of numbers over the weekend, starting from Friday. We have to do justice to the others. Thank you very much, Jal and Balaji. We're going to keep Prakash for a little longer for the other results. Both of you have a great summer 2079 as well. Prakash, there are so many banks to ask you, but let's start with Kotak versus ICICI. I mean, Kotak has obviously been the underperformer. Is there any reason now to, put some money there, or would you continue to back this horse, ICICI, which has delivered so much?
Good morning, Lata. Great to have you on the show. Yes, so essentially, ICICI continues to be the darling. It was a consensus pick for last Diwali, right? And it has probably delivered to a large extent. So what's interesting from the Kotak numbers this time around is, they've managed to get the NIMs up. Now, whether those NIMs sustain at 5.2 or whereabouts is a big question. And secondly, the fact that Kotak stepped off the accelerator, the pedal the last couple of years in terms of its lending profile. And they're probably making a comeback of sorts, and being a bit picky about what they lend to, whom they lend to, could probably be interesting because they will not compromise on margins while growing their book. If they continue with that strategy, of course, the CASA franchise has to kind of, get accelerated, commensurate and all that. So that's bound to happen. But Kotak always will start attracting premium valuations again, far richer than what it has been doing, let's say, over the last 12, 18 months, given the fact that all the subsidiaries are also locked into that valuation. So I think it does have a case for outperforming the market. And the market always likes something new, something which is yet to kind of, deliver. So Axis and ICICI have probably made it to the grade, but Kotak could see that underperformance coming to an end. But it'll all depend on whether they can sustain this kind of a growth, these kind of metrics. So that's a key trigger. But I think the market is in a mood to give them that, be a bit charitable and give them that option.
Okay. I wanted to ask you about some of the smaller numbers that came through, Prakash. And out of that list, VIP Industries look like a solid set this time. I mean, the sales are now 25% above the pre-COVID levels. And people are traveling, with a vengeance now. So your thoughts on the stock?
So, Sonia, it's not just traveling after a long gap, but, all your old luggage would probably have worn out as well, out of non-use maybe. And the interesting change that's happened in that sector, and that's one of the reasons why you've also seen the likes of Safari and all fly in the last, 6 to 12 months, is that the Chinese imports have actually been curbed dramatically. So the entire market has shifted more towards these branded players, more of these Indian names. And that's exactly where, they've got a bit of pricing power back, which they never had. They kept on bleeding, in fact, to a large extent pre-COVID, and it was very difficult to sustain any profitable growth. So that's kind of coming back. But you know what? It's like it's a turnaround. But let's say if this were to sustain, they've already start getting valued very richly. So, but look at Safari, maybe on a like-to-like basis, you'll probably find slightly better strength out there as compared to VI.
Okay, all right. Hold on. Prakash, we're going to have a few more questions for you. For the time being, we'll slip in a short break. When you come back, we'll also get in Mitesh Thakkar as well as Sudarshan Sukhani. They'll be joining in with their technical trades. Welcome back. Well, the SGX Nifty is suggesting a start around the 17,800 odd mark. As we've been telling you, you need to compare the SGX Nifty with the Nifty future. So that would mean that we're bracing for a bit of a green tick to kickstart trade. But let's get in Mitesh Thakkar as well as Sudarshan Sukhani. Season's greetings, gentlemen. Thanks so much for joining in this morning. Well, Mitesh, you go first. What's your take on the Nifty? Beautiful run is what we've had, staring at around 17,800. Time to take some money off the table, or do you believe we're good for more?
Good morning, Najib. Season's greeting to you and the entire CNBC family. My sense is that, 17,800, 850 would be some kind of a pivot area. We have, in fact, for the last many days maintained this as the target zone, or the first target zone, let me correct it. And I think I would be tempted to take money over here, wait for a dip to play out, maybe around 17,650, 670, re-enter once we get a dip in the next couple of days. Broadly, I think good chance that we will eventually test 18,100. But 17,800, 850 would be a slightly tricky zone, and I think it will attract a lot of supply. So the first reaction when the markets are around 17,800 or just above it, I think is to take profits.
Okay, Sudarshan Sukhani is also with us. Sudarshan, good morning. Happy Diwali to you and your family, and hope this is one of the better ones that we've seen in the last many years. How are you feeling about the market now? You think it's just a matter of time before we get to new highs, and what's the call for today?
Good morning, Sonia, and a happy Diwali to all viewers. See, I'm upbeat on the market, and the very simple reason is that this is a seasonally bullish period. When we start the beginning of from the month of November to sometime during the budget, which now is February, the 4 months are almost always outperformers. So let's look at a very deep decline behind us. That correction is probably over, and we are looking at a seasonally well-adjusted bullish pattern. So I'm upbeat on the markets. Now, when you are upbeat on the markets, the idea is to buy on dips as far as possible. So there should be only one theme: go long in the market and to accumulate. Today, for specifically, we have seen a big gap up yesterday. So today the markets could consolidate, could pick up some more gains. I would be a buyer on a very shallow dip towards 17,700, or let's say 650 to 700. And I can't be so specific. The important point is, if you see a minor dip today, go long in the market and stay long at least for a couple of days.
Okay, let's get some picks going as well. Sudarshan, what do you have for us?
Well, Dr. Reddy's is a buying opportunity. One of the problems with pharma companies is simply that we never know what the news will bring. But if I were to look purely at the chart suggests that Dr. Reddy's is willing and ready for some kind of a breakout. It's a buy with a stop under 42.50. Asian Paints is my only intraday short. The stock has been a disappointment, surprisingly, because it was always a blue chip. It's an intraday short with a stop above 31.59. M&M is a buy. M&M has been consolidating, and in that sense, it's been a little bit of an underperformer recently. But that happens. Momentum is now picking up. I would be a buyer in M&M with a stop under 12.40. And finally, ONGC is giving us a very attractive bullish pattern that takes time to develop and eventually move on the upper side. But there's a buying opportunity here with a stop under 129. When we are bullish, the thrust should be to look to buy.
But good morning, Sudarshan, and really happy Diwali from me as well. What's the call on the Nifty Bank? Is that likely to be the outperformer? And within that, which is the winning horse?
Hi, good morning, Atak. Pleasure to hear you here. Again, see, the Nifty Bank has been an outperformer that we can all see. I can't say which of them will be continuing to be an outperformer, because apart from ICICI Bank and State Bank, it does appear that Kotak Bank is also getting its act together and may participate in the rally. But the heavyweights will continue to be better off. ICICI Bank should be certainly the star of the show. The Bank Nifty is likely to make new highs much earlier than the Nifty. So if you want to choose between the two, the Bank Nifty is a better choice. But because the Nifty is a broader index, it's always wiser to stay there also.
Okay. All right. Sudarshan and Mitesh, your stock ideas for today?
Yeah, I have 3 buys to a sell. ICICI Bank is a buy with a stop at 909, targets of 955. AB Capital is a buy with a stop at 111 for targets of 120. And Exide is the third buy call with a stop at 157 for targets of 166. One sell call that's in Bajaj Finance, I think looking like some profit booking can take place over here. keep a stop above 72.55, look for targets of 70.80.
Thank you, Mitesh. Greetings of the season for you as well. We have to take a quick break and thereafter we will be almost at market opening time. We're going to connect with Krishnan ASV, the lead analyst for banking and financial stocks at HDFC Securities, to talk about the several banks that have announced numbers, of course, led by ICICI and Kotak.
Brought to you by LIC.